Hey folks, Dan Frio here with your closing bell for September 17th, 2024. So we saw mortgage rates ease a little more today. Will that continue to tomorrow? Well, it's going to depend on the Fed. But I do want to advise you of something. The Fed could cut rates tomorrow and mortgage rates go up. Yes, I said it. The Fed could cut rates and mortgage rates actually go up. How does all this work? Well, that's what we're going to explain in today's video. So let's get over to it. Right through here, this is what I call the calm before the storm. Look at this. Dow Jones -15, S&P 500 up 1. We have the NASDAQ up, a little bit, the VIX, everything's flat. This is what I call the calm before the storm. Usually the day before, in the morning of the Federal Reserve meeting, the market's just flatline. Well, the good news on my side of the stake is cryptocurrency is at now $60,337, so considerably up from where I bought last week at 54. So I just keep you guys in tune what's going on there. You can see also the Dow Jones and everything else is continuing to hit those record numbers day after day after day. I'm not saying this is going to keep going on forever. I'm just saying a lot of people are missing out on, you watch these crash videos. We've been hearing the housing market's going to crash for 3-4 years, and you've been hearing the stock market's been going to crash for the last year and a half, 2 years. And at some point, it's going to correct. But you have to pay attention to who you're following, okay? Make sure if you're following the right people, because are they pointing you in the right direction, or are they just kind of keeping you in the humdrum scenario that you're always in, So I always say this, hurt people hurt people. So watch who you follow. That's all I got to say. So what we're really focused in on tomorrow is right through here. It's one of the biggest meetings for the Federal Reserve because you have a lot of Fed officials at odds. You have half of them that want to cut 25 basis points. You have the other half that want to cut 50 basis points. Yeah, I think you have most of them that are off the bandwagon if they don't want to cut at all. So they have that to contend with. Plus, they have a dot plot. If you haven't seen the dot plot, check out this morning's video. I put it right up through here, kind of explaining how the dot plot works a little bit for you. But I want to explain to you guys what my thoughts are. So here's what I'm thinking. I'm thinking they should stay at 25 basis point cuts because I want them to do multiples. I don't want them to do a one and done or a one and let's watch and see what happens. I want a continuous flow like they did when they started increasing rates. They increased rates and they just kept doing it over and over and over. I think it was like 10 or 11 times simultaneously. They did that, putting rates basically from almost 0 up to 5.25%. So that's what we're seeing right there. Here's my take on it. You have the employment numbers right through here, and I'm going to get my head out of the equation for a second. A lot of people are saying, the employment numbers are crazy. They're crashing. This is bad, and this is terrible. Here's what the unemployment numbers look like right now. Folks, this is a crash, okay? This is a crash. This isn't a crash. Look, over through here, this is, again, it upticked through here, and if you truly understand what happened during this time frame, the Great Recession, you understand what happened here. It's not because home prices went up so high and they had to crash, is the whole world imploded at this point because of the financial matters of subprime mortgages, believe it or not. Then you go over to here, and this is where inflation is. The Federal Reserve started up here when inflation was 9. Now they're down here saying, okay, this could be actually, it's getting it right in the range of where they want it to be. So they're like, okay, we tackled the inflation front. Now we got to make sure the unemployment numbers don't fall off a cliff. Okay, so that's my take on it. Is we don't have. I'm looking at a 50 basis point cut or a little bit higher cut to kind of give a, when somebody has a heart attack and you go, and you shock them, that's but the system right now doesn't need it. I don't feel that it needs it. Okay, so that's my take on the market right through there. We go over to the what the bond market's doing right now. It's down 5 ticks. But what I want to share with you guys right now, here's a former Fed official. And some of you guys love these videos and others don't. I like these because, especially the former Fed officials, they can actually tell us more than what the people that are sitting on the Fed can tell us, at this time, because they can't reveal what tomorrow's going to bring. But if you're a former Fed official, you probably have a little bit more looser lips. So let's get his take on this, on how this is going to transpire tomorrow, and then we'll kind of come back. I'm going to show you the CME FedWatch tool and the previous dot plot and where the changes might be right there and then. So let's get to the former Fed this interview. I think you're going to like this one, and then we'll be back with the dot plot. Take it away.
Will the Fed cut rates by 25 or 50 basis points tomorrow? Let's get an outlook from a former voting member of the FOMC. Joining us here at Post 9 is former Fed Governor Randy Kroszner, usually in Chicago. Nice to have you here in New York.
Great to be with you.
Welcome. So which is it, 25 or 50?
Yeah, so this is the toughest decision.
Here, remember, If he sat on the Fed, he couldn't tell us. I'm surprised this guy actually leaks what he's feeling. So let's get to it.
That they've had, and usually things are really well telescoped out, so everybody knows. And when you look at the Fed transcripts, you can see that most of the discussion usually is not about how much to cut or how much to raise, but what to say about what's next. I think the discussion that they're having today and tomorrow is going to be just as much about whether it's 25 or 50, or and what they're going to say about what's next.
So you see the case for both?
I see the case for both. My guess is I think it's a fine balance. I think they're probably leaning a little bit towards 50.
Really?
I think
Why?
they would have given some more pushback. So I think they see the economy slowing. I mean, you've heard a lot of discussion about that, about the labor market slowing. They don't want to be too far behind the curve. It would have been not unreasonable at the last meeting to cut 25 basis points, but they decided to wait. And I think that if they do 50, Jay will spend all of his time in the press conference saying, no, it's not all 50s. If he does 25, it's like, oh, more will be coming. So no matter what, he's going to be in a bit of a pickle.
Do you think the uncertainty between the two numbers is by design, or is it about having trouble building a consensus on the committee, something else?
Oh, that's a very interesting way of putting it. I think it's the combination of the two. I think the reason that he's not sure exactly, and the Fed is not sure, is because perfectly reasonable people, you don't have to be like an extreme hawk or extreme dove to make a case on one side or the other. And I think with the economy slowing, there are a number of people, like someone like Chris Waller, who has said, we went fast on the way up, we can go fast on the way down. But there are going to be others.
Okay, I'm going to pause that for a second. Remember, he said in this time frame, are they a hawk or a dove or a hawk? Okay, let me put it into context. If you're new to the channel, a dove is one that's always saying, oh, we need to cut rates, just cut them. Hawk is always saying, oh, we can't cut rates. It's not good enough. So I'm going to take this back about 10 seconds. Now you understand the differences between the two, and we'll take his take on it. Previous meetings, I would come out and say, okay, here's the person talking today in front of mainstream media. They're a hawk. So everybody's going to think rates are going up today. And then, well, this person's a dove, so they're going to say rates should be coming down. So you have to really pay attention a lot of times what Fed official is speaking. Are they a dove or a hawk? Okay, so let's get back to this equation. So now you understand a little bit more about what he's talking about. So let's go 10 seconds back. We can click that right through there and get back with it. So here goes.
And I think with the economy slowing, there are a number of people, like someone like Chris Waller, who has said, we went fast on the way up, we can go fast on the way down. But there are going to be others, say like Mickey Bowman, who's going to say, hold on a second. Core inflation for the last 3 months has been bouncing around between 2.5% and 3%. That doesn't suggest to me that I'm confident that it's coming down.
And it's not, I know they're worried about the economy softening, but there's plenty of evidence that we're still in growth mode.
Yes, but they try, what you always try to do is look in the front view mirror and the rear view mirror. The data from that we have says things are okay, although the labor market is slowing. They have to try to think, where is the labor market going? And if they think that it's going to slow down because of the classic long and variable lags, Milton Friedman talked about that 70 years ago. And it's such a great phrase because it's a very nice, learned way of saying we're not sure, because it's long and variable lags.
They can be 5 months, they can be 5 years.
And so I think it's reasonable they need to get moving because I do think the economy is slowing.
Do you worry about what's happening in the labor market?
Yeah, and I guess maybe I'm old-fashioned. I look at the real interest rate. That is the difference between the inflation rate and the actual interest rate. And so Fed raised rates to 5.5%. They were super behind the curve. But inflation's come down a lot in the last year and a half. And so inflation's, depending on your favorite measure, 2-3% around there. But real interest rates, the inflation-adjusted rate is 2 to 3%. We haven't had substantial positive real rates since the global financial crisis. So I think that's going to have an impact going forward.
I'll argue on Sarah's behalf. Wouldn't 50, doesn't going 25 minimize any potential political blowback?
He's going to get blowback no matter what he does.
He's going to get more if he does 50.
Yeah. He'll get more if he gets 50, but I think once you're going to get some, if you think it's the right thing to do it.
Oh, not a bad interview. So what did we learn about that? He talked about, the spreads and everything else. So one of the things when he started talking about interest rates and so forth, what he meant by that is we have the federal funds rate. It was about 0.25% about 4 or 5 years ago, 0.25. Now it's 5.5. Okay, so the inflation rates, let's say it's at 3 if you want to be on the high end of that. So we have the federal funds rate at 5.25. We have the inflation rate at 3. The spread there is 2.25%. So that's how much room the Federal Reserve has to cut. So even if inflation raised a little bit, there's still room to cut, but you have to be cautious on how you do it and when you implement it and how you implement it. So that's that part of it. So let's get to the CME FedWatch tool. Here's the probabilities of what's going to happen, and this is changing all the time, but let's refresh this so we're right on the fresh screen. And guys, we are within 24 hours of all this happening. So let's go to I use the aggregate here just so I can show you guys what we're using. Now there's a 63% chance that they're going to take that 50 basis point cut at the next meeting. So we'll find out tomorrow. But the biggest news coming out tomorrow is the dot plot. And you can see that right through here. What the dot plot is, and check out this morning's video, you have to check that out, is basically every member of the Federal Reserve, they sit there at this meeting, the meeting that they're sitting at tomorrow, and they're going to put a dot where they want or they expect the federal funds rate by the end of this year, by the end of next year, and we're going to scrap 26 and 27. They don't even know what's going on in 2024. So here's where the last time they did this in June, this is where they put it. So they said, basically the consensus vote was we'd be at 4.75 to 5.5 or 5 by the end of 2024, and they're on the projection to get there, I think. And then here's the kind of the odd part of this. 2025, they're saying the federal funds rate should be 4.25%. Okay, so that means there's 100 basis points of cuts coming. And then if you go further out, it's even more. So that's what we're looking at right through here. This is what the dot plot is, and this is one of the things that's going to come out tomorrow, and everybody's going to be focusing in on basically what 2025 is going to look at. How low are they going to drive down this number? And then that will project to us and the markets where the Federal Reserve's minds are and where they're, where the progress on their efforts are going to take us. So that's the report right now. I'm going to tell you basically that's just, that's it. In this, I'll come out tomorrow morning with the news. But then we're going to have a live event tomorrow, right at when the Federal Reserve comes out and announces what they're going to do, and we'll be live. And I'm going to show you guys what the reactions are, and it'll be even a surprise to me. So just to let you guys know who I am, my name is Dan Frio. I'm actually a loan officer. I'm licensed in all 50 states as well as Puerto Rico, and I'd love to help you if you're out there trying to navigate this real estate world. If you're looking to buy that first house, maybe buy your first investment property, maybe looking to refinance. Rates are coming down. Actually, I got 4 refinance applications today, believe it or not. We'd love to help you. So visit us at therateupdate.com. You can put in your application there, or you can even, what a lot of people do is they scroll down to the bottom and they call us. The 800 number is 844-775-5626, and don't be afraid. There's me and 2 other guys that's going to answer the phone, and they're all like me. We're here just to help you. We're not trying to hard pressure you. We just want, I always say this, give me the pieces of the puzzle and let me help you put that puzzle together. So love to help you. I'm licensed in all 50 states as well as Puerto Rico, so there's no reason why you shouldn't be using me. So thanks so much for watching, guys. God bless. Have a fantastic evening, and I'll see you back here tomorrow morning. Take care. Bye-bye.